Hello, everyone, and welcome to the Elevate Your Equity podcast, where investors with a special emphasis on couples begin, continue, and deepen their journey to financial freedom together using the powerful vehicle of real estate investing to do it. Today, we've got Mr. Adam Gower on the call today. Adam, it's great to see you. Adam is an expert in crowdfunding, and he's taught over 4,000 students on how to earn passive income and build their wealth by investing in real estate, crowdfunded syndications, and maximize their returns without taking on excessive amounts of risk. And over the last 5 years, he's built a digital marketing agency at GowerCrowd, where he advises real estate pros on how to raise capital by helping them build and convert their investor lists. To date, his clients have raised over $150 million in equity using the investor acquisition system, which is Adam's proprietary system for capital raising. Adam, thank you so much for being on the call today and being with us on the podcast. How are you?
Eric and Sophie, thank you so much for having me on the show. I'm extremely well. I'm very excited to be here. Thanks for asking me.
Glad to have you on.
Love your energy, Adam.
Yeah, this is awesome.
So I'm just caffeine driven. I'm 100% caffeine driven. All these people that say they've given up caffeine makes no sense to me at all. I don't know how or why you would want to do that.
I was gonna say, with the caffeine, I'm glad that we're not alone. That's a good thing. So
yeah,
let's go ahead and get going here. So first, Adam, we always like to start with our guests on how you got the spark to invest in real estate, or how you learned investing in real estate. That's awesome.
Okay.
That was a present.
I'm so glad we have this on video.
Yeah, for some of our video listeners, you're gonna have to tune into YouTube to check out what just happened.
Oh yeah, it's definitely better. You know, you can actually publish. You can actually publish podcasts in video format. It takes up massive amounts of bandwidth, but I actually saw somebody I watched somebody's podcast one time, and it was a video. I'm actually going to try that with a podcast I've got coming up soon. But let's stay on topic. Whatever. So you asked me, how did I start? How did I get into real estate investing?
Yes, sir.
It's a long story. I'm going to try and keep it brief. But my family was actually my extended family was big real estate developers in England and actually in Spain when I was growing up. So it was always there in the background. My personal connection started way before either of you were born. And I actually started pulling wires for an electrician in San Diego in 1982. And that's really how I started. And from there, I'll try and keep this short, but I ended up being hired by a small mergers and acquisitions company that wanted to do some company acquisitions. And one of my friends was a real estate developer, and I asked him, why are you doing M&A when you could be doing real estate investing instead? And so it just kind of they repositioned the company, and I started making introductions. And in the 80s, I raised over, well, in 80s dollars, it doesn't sound like very much today. It was around 30 million or so. That was 80s dollars. So I should probably add a zero to that. This was in my early 20s. And that's really that's the very, very earliest genesis. Started pulling wires for an electrician.
That's incredible. Wow. So you got exposure to all these properties by being out on site, by being the electrician, pulling the wires, working with someone or working for another company, right? And just getting out there and seeing, oh, this is an interesting building, or that type of thing, right?
Well, these two things kind of happened in parallel. So I was working on job sites. I understood what, from quite literally the ground up, what it took to develop real estate. And then I started working for a developer, and they were doing the ground up apartment buildings all over the San Diego County area. But my job was to raise money. Actually, I had a lot of responsibility. It was a small family office. I knew them from England. And I helped with design and other financing and various other aspects of development. So I was exposed to a very early age to every aspect of real estate development. from the ground up. Yeah, that's how it happened.
That's cool. So I'm just trying to put myself in your shoes, right? Many years ago, you probably, before you hopped on the call, you shared with us that you have a spouse and you have kids as well, because you're working on their calculus homework with them, which is very honorable, by the way. I don't know if I'd be able to dust off those books and add any value, but in any event, you have kids, you have wife, you had a full-time job, and then you have this developer person who said, hey, let's start, if you can get some money together. It seems like it would be a lot of effort. Can you walk us through the genesis of how you were able to place capital into your first deal?
Yeah, so when I started, I did not have a wife or kids.
Okay.
This was a very long time ago. I have a wife and kids now, but I didn't then. And it's interesting you should ask, what actually comes to mind as I remember so long ago. It's almost 40 years. I don't like to tell people I've been in real estate for 40 years. It makes me sound too old, but I really have. Let's say 82 years. 22. That's amazing to think about that. But what actually stands out in my mind about those very earliest days is a spreadsheet. I remember looking at the pro formas, and I'd never seen a pro forma before. And in those days, they were steam-powered spreadsheets, basically. I don't even think Excel existed. We used Lotus Notes, I think. I mean, it was just a long, long time ago. But understanding how the numbers worked was very compelling. We had the cost of I remember the cost of construction, the total cost of the project, all the cost line items, the time it took, and the underwriting, the expected rents, and then how that yielded, upon stabilization of a building, how it yielded a higher value than the total costs. Mm-hmm. And so to me, when I first started looking at these and was guided through it by this one developer that I was working with in those days, it just made intuitive sense to me. And the people that I was pitching these deals to were Japanese investors. So this was during the big Japanese wave of investment in the United States in the 1980s. I will tell you a funny story, actually. So we had these kind of teams of investors would fly out from Tokyo and land in San Diego. And my job was, I presented. I wasn't a principal, but I was like the guy that presented the deals. And I remember one time we were sitting around a conference room table. They all spoke Japanese and no English. And in those days, I didn't speak any Japanese. So there was always an interpreter there. And I remember looking at this one huge deal that we were working on in downtown San Diego. And we'd spent a long time preparing for this meeting. We had a pro forma and slides and all. It was literally slides. You pressed the button and it threw up another slide on the screen over there. And I was looking at the pro forma and I was walking them through the assumptions. One of the first assumptions that we had was cost of land, purchase price of the land. And the land was $50 a foot.
Wow.
And so I said, it's $50 a foot for this land. And there was a little buzz around the table, and the investors, I'm just going to turn my phone off it. The investors all huddled together, and the interpreter came back and they said, no, you've got the numbers wrong. You've got the decimal point in the wrong place. No. It should be 50.00. It should be 5000, $5,000 a foot. And of course, I broke into a cold sweat. Like the whole thing, we blew this whole thing up. And we looked at it and just, kind of double took this whole situation. And it was $50 a foot. And I said, no, it is $50 a foot. And they all laughed. They said, basically, if it's $50 a foot, you don't need to say anything else, we're in. So I went through the whole presentation, but cost of land in Tokyo in those days was $5,000 a foot.
That's wild.
And they just, it was 500 or 5,000. Anyway, whatever it was a multiple of 10 or 100 off. And when we told them downtown San Diego is $50 a foot, they just said, all right, we don't really care about anything else. We're in. So I went through the rest of the presentation. It was kind of needless. They'd already decided at that point.
Knew. Wow. So it's the perception that they had based on what they thought the value of the land would be, based on like just the complete differences in market, like what they're used to versus what we're used to. And that kind of helped provide the match between investor and offerer. So
it made it very easy. It was like the term I used in those days, like falling off a log, raising money.
That's awesome.
It wasn't as easy as that, but it felt like it.
You know, Adam, I don't want to take up too much time here, but I wanted to tell you a similar story. I know that we're on air right now, but I wanted to tell you a similar story that happened to me, and I'll be as brief as I can, but it reminds me of this. So I was in Europe, and I was living in Germany because I took my junior year of college in Germany. I took my junior year of chemical engineering school. And, you know, I took the opportunity to travel a lot, you know, throughout the country. And one time I remember going to the airport in the U-Bahn, right? So I was traveling straight to the airport. And I remember saying, oh my gosh, I left my passport. It's not with me. So I didn't have that, but I had my driver's license with me. Okay. Now here's the funny thing. In the United States, when you give dates, even on driver's license,
it's the other way around. I know.
We start with the day, the month, and then the year.
I still get confused over
the month, really day, year, right? It's month first, then day first, and then year first. And when I presented it, you know, in Germany, like everyone is very like strict with the regulations, but I found a very nice lady who was able to help me get onto the flight. And when she looked at my driver's license, because I'd been out of the United States for so long, my driver's license had expired. And so,
oh my goodness!
But the date where the month,
it looked like it hadn't. Yeah, you got lucky.
So they just assumed that it was actually correct, because I think it just so happened that like the first, it was in like on the 12th of like May or something like that, and so they thought it was December 5th, but it was actually May 12th, and this was out in October or something like that. And I was traveling to Spain, and I think I just lucked out, and so it was really cool. I was able to make the flight and continued on my journey. So I just that difference of expectation in cultures across the world, it makes a big difference, right? It does make that difference there. And so, okay, cool. So that's an awesome story. I love it. Let's talk about how where you went from here, because as soon as this deal went through, this is one of your side hustles, right? Like this was something that you weren't doing for your full time.
No, this was full time. I was paid a big salary. So I will tell you what happened, because it was a formative experience, and it's something that. How long have you been in real estate investing?
Just for me, it's been, or for the both of us, it's been about 5 years. Sophie's family have been doing it for a very long time. So
okay, all right. So Sophie's family probably has a very good perspective, but I'll tell you, this was a formative experience for me. So the market in the United States in the 1980s was on fire. Everything was, all assets were going up. And the key thing, you know, I haven't got it in front of me. There's a book I just bought because it resonates. Everybody said this time is different. And that, you know, the population is going up in San Diego and prices are going up. And because of A, B, C, D, and F, it's never going to go down, right? This time is different. What happened was there was as the savings and loan crisis. So there was hundreds, if not thousands, of savings and loans institutions and banks went bankrupt, and the real estate industry imploded. And so I had on paper made, in my early mid-20s, I'd made millions of dollars because I took a lot of shares in the companies. I invested in the deals that we did, etc. I spent all of my salary. I just got to be careful what I say, but I spent it wildly because I thought I had all this wealth, right? On paper, I was a multimillionaire. So why not just live the high life? So that's what I did. Mm-hmm. When the market turned, which it always does and will do again, period, I lost everything. And so the short story to where I am today is I actually ended up, my Japanese investors asked me to go to Japan and help them with the situation because they'd lost all their money. So I ended up going to Japan. I learned to speak Japanese. I helped them with their divestments. And I ended up being hired by a joint venture of Universal Studios and Paramount Studios to build out all their real estate in Asia Pacific. I was Daihyo Torishimariak Shacho, which is president of Asia Pacific for Universal Studios. So I went from kind of small private equity into institutional finance and raised another 400 million or so while I was in Tokyo to build out these real estate across the region. Then I came back from Japan in the early 2000s, and I'll try and keep this brief. And I started working on my own portfolios. And in 2007, so I did my own investing. And then in 2007, there was something going on that made me very uncomfortable. I had some deals, some development deals in play, and there was something I didn't know at the time what it was. So I sold my entire portfolio. And then the market collapsed. The global financial crisis basically wiped out real estate across the United States. And I was brought into a bank to assist through the board of directors, again, another long story, to assist the bank divest of their non-performing loans. So all these loans that have been made collateralized by real estate that were not being paid anymore, right? They were all in default. So I worked on around $1 billion of notes at that time, each one individual. And what I learned the second time, after the 1990s, the savings and loan was right at the beginning of the 90s. What I learned the second time by going through all these workouts and selling all these notes was every possible way that real estate can go wrong. And it reminds me of a lesson that I learned sometime deep in my background. It was about golf. Somebody said, when you watch a golfer, if you want to learn how to play golf, there's no point watching a pro because they're doing it perfectly. You try and copy them, but it's just, they make it look too easy. If you watch hackers, you can see everything they're doing wrong and correct for those errors. And that was my experience of real estate, going through now basically the second major collapse in the real estate market. Was for the second time I saw every possible way that real estate investing can go wrong. And those two experiences really were utterly formative for me in understanding how to properly underwrite by not making the same errors that I'd seen hundreds, if not thousands of other people make.
Thank you. That's a really, really cool to hear, that it sounds like history repeats itself. I wanted to ask you too, Adam, and this is a selfish question. I'm sure that, we're eventually going to get to the personal side because we want to learn more about, how you grew all this and what your balance was at home, while you had kids and wife and all of these collapses and rebuilding your portfolio and now what you're doing now. So a lot of things to cover and we don't have too much time, but I have to ask a self-serving question, which is, given right now, as of right now, we're recording this in the beginning of Q4 of 2021. And right now we're seeing a bunch of government quantitative easing, printing out tons and tons of money. We still have lots of demand from the shock of COVID-19, and then there's supply chain issues. No one wants to work. Unemployment is low though, because it's just not the metrics that we're measuring, but people don't want to work. I wanted to ask you what you see macroeconomically. Do you see hyperinflation in our future, knowing full well that you don't have a crystal ball and this is just your opinion, but you've seen lots of real estate cycles. I'm just curious if you get this question a lot and what your thought is.
Yeah, so hyperinflation is a very different kind of concept. Hyperinflation is where we go from 0 to 1,000% a month. So I don't see that we're going to anything, or 100% a month, whatever. We're not going to go to that. But inflation is a very serious concern right now. Clearly, being invested in hard assets like real estate has a lot of advantages and is a good hedge against inflation. There's lots of reasons for it, but at the highest level, you can lock in low-cost debt for a long period of time. And that's one of your major costs. And if you can stabilize one of your major costs and see rental income go up with inflation, then you've got that delta between your costs and your income that will benefit and is a good hedge against inflation. So that's certainly one of the major considerations when looking at investing in real estate today. It's not the be all and end all, but that's how I would characterize an answer to your question.
Sure. But as far as like the trends go and what you've seen in cycles, like, do you anticipate, I mean, obviously you don't anticipate hyperinflation, but do you have an opinion as to like what may happen here in the future? Or is it just kind of like no one really knows like when this ride is going to end?
No, I can totally get with absolute certainty. There will be a horrible crash in real estate.
I can imagine.
There is no doubt about that. Do not, anybody listening, have any doubt about that. If you don't invest prudently and wisely and take every possible precaution and underwrite deals to the assumption that the bottom will drop out of the market, you will lose everything, period. That will happen. Now, when it will happen, I don't have that crystal ball. But it is, looking at the way that inflation is climbing at the moment, like you say, the fiscal stimuli that are going into the market, the excessive liquidity that is in the market, the excessive demand that's in the market, everything is pointing towards a bubble and inevitably a crash. Yeah.
Okay, thank you. I had to ask the question because I just, I'm curious to know, because I haven't really been investing in this type of environment before, because I'm relatively new. I only started investing in 2016 or 2017, but I know that I don't know something. And right now, like that's why we're investing in mostly cash flow markets, where even if we have an economic occupancy of only 60 or 70%, we can still cover our fixed debt. And that's at least what we're planning for, is buying in those markets where we're not buying stuff to depend on interest only loans all the way to the end and then selling something for a cap compression, like basically gambling. We're buying for cash flow. We're buying in areas that have plenty of healthy dynamics behind them. And that's all I wanted validation on, and just because
so the best thing to do is not to overlever, as long as you, and also not to be greedy. What do they say? Pigs get fat, hogs get slaughtered, or it's the other way around, right? Hogs get fat, pigs get slaughtered. So it's nice to. One of the biggest challenges in crowdfunding and the way that the real estate market has exploded is what I call the crowdfunding paradox. And crowdfunding paradox is like this. As a good cycle, as a strong cycle, or a bull market continues, what happens is that prices go up and returns compress, and they get smaller and smaller, and you have to underwrite and understand that your returns are just going to be smaller than they were. You've got to look at the risk-free rate, which is the 10-year treasury rate, and you've got to look at the spread, the delta between the risk-free and what you're getting, and be satisfied with something that is consistent with the kinds of returns that you've seen historically versus the risk-free rate. The problem, and that's how prudent investors invest. That's how institutions invest. That's how people who have been through cycles invest. That's how you live to survive another day. If you chase, and this is the paradox with crowdfunding, if you chase the highest IRRs under the assumption, or the highest returns, when you look at all the possible investment opportunities that are out there, what's going to happen is that the assumption is that, all right, so we've got somebody over here that's assuming a 12% IRR, and somebody else over here is assuming a 20%. So I'm going to go with the 20%, because if I invest with the 20%, what's going to happen? They'll fall short, they'll hit 12. If I invest with the 12% guy, they'll fall short and I'll be wiped out. No, that's not how it works. Anybody that is underwriting or projecting a high IRR at a time when IRRs are coming down, when returns are coming down, is much more likely to lose everything. There's only one way to get the kinds of IRRs or returns that people are projecting today. That is by extending your assumptions just to drive the IRR up. And it's an easy metric to play with.
Oh, very easy.
And that's the paradox, is that crowdfunding has created this kind of IRR inflation, right? Where in reality, they're coming down, returns are coming down, but everybody's competing with higher returns to attract novice investors. Don't be fooled by that.
Right. I always say, especially when it comes to the syndications, like if you're going to be participating in a syndication where there's one lead operator, if you are working with someone that you've worked with before, or you have someone that you know, and they project a low IRR and then pleasantly surprise everyone, you better bet that this person has conservative underwriting and they only acquire the assets that make the most sense. And so if you try to chase the high IRR and just don't do your due diligence, this is exactly what's going to happen. So I completely get that paradox. And so thank you for sharing that. So let's shift over to the personal side, because obviously you know a lot about you know a lot about all of this. It seems like you have a lot of experience in many cycles and different types of asset classes and working in it full time for many years. Let's talk about what your personal life was like when you were building this up. Was there a sense of balance with your kids, your wife, or was it all business for a little while? Or let's talk to you a little bit about how your home life was as you were building this whole thing up.
So the shift in my career has been over the last 6-7 years or so, and I'll try and keep this brief and get straight to your question specifically. But that's when I shifted from active investment into building systems because of the Jobs Act of 2012. Again, it's a huge topic, but into building digital marketing systems for real estate sponsors and attracting investors into deals. And so that was really the biggest shift in my career. When I met my wife was actually right before the global financial crisis. And so when I sold out my portfolio in 2007, I made a bucket load of money right before the crash. So that's what she saw, was a big win ahead of a tremendous crash. And since I started this new business, I'm very fortunate. As hard as it is to build a business from the ground up, I have always had and continue to have absolute confidence that I am onto a winning strategy. Zero doubt. And my wife has always believed in that. I've always paid the mortgage and covered expenses and lived relatively affluently, etc. Even though we've been starting from scratch, right? With building this business. So she's always been at ease about that. We've never had any issues about it. We've never really, we don't live particularly luxurious lifestyles or expend crazily. We're both prudent, modest, in our spending. So it's never really been a big issue.
Has she taken any interest or participated in the business at all? And
no. Thank goodness for that. No, we definitely have dividing lines. I've got two boys at home, one at university, and so I'm very grateful. We have a fairly traditional home in that I look at what she does, raising the boys and managing the house, as an incredibly difficult job. Actually, it's really, I'm so glad I'm not really involved in that process. I defer to her and she defers to me, and we have, I would say, pretty close to perfect harmony in that regard.
Oh, that's awesome. Adam, can you give us a sneak peek into your daily routine? What does your average day look like?
So my average day, I wake up usually between 4 and 5 o'clock, 4:30 or so. I get up, ingest vast amounts of coffee, run, and then I just start with going through emails and managing my clients and building funnels and concocting new marketing strategies and building new systems and testing systems, et cetera, everything that we do. And then my boys rise and shine around 7. So they bounce off the walls for an hour or so. But generally, I'm around at that time. That's when I conduct my morning ablutions as well as they do. And then once I just shifted actually. So I just moved back to the office for the first time in 18 months. But basically from as soon as they leave the house, then I start working again. I just sit at my desk. I handle incoming emails. I deal with clients, build systems, test stuff, et cetera, as I said already. And then that will go until the dinner gong, whatever time that goes off. So that might be 6 or 7. And then I stop working, and I like to be in bed and horizontal and unconscious by between 8:30 and 9.
That's great.
Primarily because I'm up so early.
Nice.
Good term.
That's it. And I do that 6 days a week.
We're going to be borrowing that term instead of going to sleep, horizontal and unconscious. I think that's
right.
That's great. And I have a couple more questions before we jump into our rapid round, Adam. So
Sure.
you were raising vast amounts of money way before the advent of like email marketing campaigns, just all
Right.
kinds of like online strategies. And so I'm just curious, from your experience, what has changed and what stayed the same, and what for capital raisers, for people who are looking to do what you do, like what are the key things that you would say are the main things that really move and shake that area?
It's like having kids. The way that I described having kids when I first had my first kid was that there's my 10-minute warning that I just added another 5 minutes to. So it's like this. When you have kids, everything is the same, but completely different. And it reminds me of this book, Alice in Wonderland. And it's called Alice in Wonderland and Through the Looking Glass. It's like when you look into a mirror, everything is, when you look at a mirror, everything's the same, but inside that mirror, actually everything's different. It's a totally different world. You step into a new dimension. And that's what's happened with crowdfunding. So the world has not really changed. You still have to establish relationships with investors. You still have to, there is still an investor journey. You still have to introduce yourself, talk about your background. You still got to establish know, like, and trust relationships. They have to get to know, like, and trust you before they will even think about investing with you. Nothing has changed. Human psychology has not changed. It's been the same throughout human history. What has changed, though, is the way that you develop those relationships. So instead of having to do that in in-person meetings, one after another, or on the phone, or printing documents and handing them over, or FedExing them overnight, or whatever you do, what's changed is the digitization of that process. And so it's enabled you to be able to communicate, instead of with one person at a time, with everybody all at the same time. But you still have to go through the exact same process of establishing a relationship. Those psychological bonds that you have to create with prospects have not changed. It's just the way that you create those bonds that has changed.
That's wonderful. Yeah, that's great advice and just good wisdom for people who feel like they have to reinvent the wheel every single time, right? And then also, Adam, last question before we jump into the rapid round. In your 40 years of real estate investing, what continues to surprise and delight you about everything that you're doing?
Well, I really like experimenting. I like experimenting with different tactics to see. What I enjoy the most today is trying to figure out what works the best in the digital world. You know, when you communicate with somebody in person, there are all kinds of nonverbal cues that they give you, so you can know if they have a question. And some of these things, they can be imperceptible, right? You either have the intuition to be able to read what somebody is communicating to you non-verbally, or you don't. I'm exceptionally good at that in person. And so when you switch to the digital world, you've got to figure out ways of synthesizing that same kind of interaction. And it's a process of trial and error. You test something and you see if it works. And if it does work, you double down on it. It's different in that way. You know, there was another experience I had actually that I'll share with you briefly. One of my closest allies when I was in Japan was a fellow called Fujita Den Fujita, and he was the owner of McDonald's Japan. He was one of the only people that owned the entire country franchise for McDonald's. Wow. And he and I became very close. And he said to me, because everybody thought that doing business in Japan was incredibly difficult. And it is at a certain level, but he figured it out. It was Japanese, obviously, but he figured it out. He said, if you can figure out what one person reacts positively to, the beauty about Japan is that it is completely uniform. Wow. And you can now replicate that same thing 1,000,000 times. And I learned that in Japan. There was always something, there was one line that I could always say that would always get a laugh. It was totally predictable. It was one line in Japanese, so always to get a laugh. And that's the way that digital marketing works. You find those trigger points that create a positive reaction. If it works once and you can prove that it works, you can scale it dramatically. And so what I enjoy the most is figuring out all the different ways of optimizing our marketing strategies and then doubling down on them. That's what I like the most today.
Oh, that's so cool.
Very cool. And yeah, there's a lot to experiment with because there's all these types of new tools and automations and ways to basically replicate you and your message so that it can be leveraged for everyone to see, so everyone can see you all at once, right? It's like a one-to-many system instead of a one-to-one. So
exactly,
that's really interesting. Also, too, I really thought was fascinating is that you probably have come from in your W-2 time or your 9-to-5 time, you were doing business to business capital raising. Now I get the feeling that it's more direct to customers, right? Because you're gathering up funds from individual investors or helping people do that, right? Is that
well? So my business is twofold. Mine is business to business. So we find developers and we help them to build systems. But ultimately, everything we're doing is trying to find individual investors.
So first question is, what book has had the biggest impact on you? Why? Outside of Rich Dad, Poor Dad and the Bible, just because we get those a lot.
Oh, no, I wouldn't give you either of those. Okay, so the most impactful, that's a really difficult question to answer off the top because I read so much. It's bad because the only thing I can think of is that I like to read books that take me out of the world that I'm in. I read so much and I'm inspired by so many different things, but most of it is on a screen. So the books that I liked, what is probably one of the most wonderful books that I enjoy, and they only come through reading them to kids, actually. I've never given this answer before, but I love the A.A. Milne Winnie the Pooh books. Yeah. They have a certain magic and innocence in them that help you to escape from the realities of everyday life. And I know that's not really very inspirational. And if I think of something else while we're talking, I'll let you know.
I grew up reading those and it gives me the warm fuzzy. So great.
But actually the last chapter of the second book, the non-poetry books, I think it's The House at Pooh Corner. I can't read that chapter without crying when I read it to my kids, because it describes how Christopher Robin, so I can't feel it now actually when I think about it. It describes his evolution, just a little step forwards to adulthood. And you realize that he is moving away from the innocence of childhood. And I find that a very tough chapter to read.
Oh, that's so
Anyway,
good, Adam.
that's very, very personal, right? That's not like an inspirational book or anything.
Oh, love it.
There's something very zen about those books, which I really love. That's really great.
That's like what they say.
If people wanted to emulate your success, what's the first actionable thing that they could do to follow in your footsteps?
Sign up to my newsletter.
There we go.
That's what we'll be doing too.
There we go.
Yeah.
And then what small thing do most people not know about you?
Well, the first thing that comes to mind is some people might not like me for this, just in case. I don't normally admit this, but I will tell you. So when I first got back to the States in the early 2000s, I decided I wanted to give back to the community. So I became a 24/7 fully sworn line officer with the Los Angeles Police Department, LAPD.
Wow.
So I went through 12 months of training as a line reserve. It was unpaid, it was voluntary. And then for 14 years, once a month, I spent a full shift, once or twice a month, a full shift patrolling the streets of LA in a black and white. Not many people know that. I don't normally admit it because a lot of people don't like cops.
Nah, it's all.
And there was a period of time when there was a lot of anti-cop hatred going on with whatever, all kinds of things.
I remember, in LA, especially with.
So I don't usually admit that, but that's something not many people know about me.
Oh, wow. That's amazing. How do you like to unwind and restore your creative juices?
So the way I unwind is I read a series of books. So back to books. I like the Bertie Wooster books. P.G. Wodehouse is the genius. The Rumpole books are brilliant. And James Herriot books on being a vet are wonderful escapes and beautifully written. And I also quite like Charles Dickens. Some of his books are really fabulous as well. They're much heavier going, but you just disappear into another world. So I like to read.
And the last question is, what's your favorite family vacation spot?
We live on a bay with the wind and sea blowing off the Pacific across sand dunes, and there's nothing I like more than sitting outside on my front porch and just breathing air that is unpolluted by any human interaction of any sort.
Absolutely. That's a great answer. Well, Adam, thank you so much for coming on the show. I know that you have to run here pretty soon. So for everyone listening who wants to learn more about you and what you have to offer, please give us a little bit of a rundown of where they can get a hold of you and how they can learn more about you and your services.
Sure. So the best way to do that is go to my website, GowerCrowd.com. That's my last name, GOWER crowd, GowerCrowd.com. And subscribe to my newsletter. It's free. We're about to launch a media channel or a media, company that is 100% focused on all things real estate crowdfunding, news. It is an extraordinary resource. We've been working on it for about 6 months and we're close to launching. So that's the best way to get in touch, stay on top and get ahead of the curve on real estate investing.
Excellent. Well, thank you so much, Adam, for being on the show. It was a pleasure to have you on. And for those listeners who have made it all the way to the very end of this podcast, we want to thank you guys especially for that. And wherever you're listening to this or even watching it, especially since, Adam had some amazing tricks that he was showing us at the beginning of the podcast, you got to do that. But for those who have listened or watched all this, please like, subscribe, comment with us, engage with us so that we can learn more about what is working for you and what you like to hear and put more of that out there. And also so that we can get up the algorithm so that we can get more attention from more folks and get some more feedback and just improve in general. So thank you very much for listening, everyone. And Adam, thank you again for coming on the show. It was great to have you on.
It was a great pleasure to be here. I really enjoyed it. Absolutely. It's lovely to meet you both. Thank you.
Thank you. Yes. And so this is Derek.
And this is Sophie.
And we're signing off for the day. Thanks, everyone. Take care.